Cryptocurrencies are rapidly reshaping the financial landscape with their unprecedented growth and influence. A once fringe idea now commands global attention. As it weaves its way into the fabric of our financial systems, it's a digital revolution, a paradigm shift from traditional forms of investment to those of the digital kind. In a world once dominated by stocks, bonds, and physical commodities, a new player has entered the arena. Cryptocurrencies, these digital assets, are now not just an alternative but a formidable force that's challenging the status quo. This shift hasn't gone unnoticed. Major financial institutions, once skeptical, are now embracing this change. They see the potential, the promise that these digital currencies hold. And no, it's not just about the Bitcoin. While it may have paved the way, a host of other cryptocurrencies have followed, each bringing something unique to the table. As the crypto wave continues, one digital currency stands out in particular: Ethereum. Ethereum, the second largest cryptocurrency by market capitalization, is more than just a digital currency. It's a vast open-source platform for decentralized applications, or dApps, which are applications that run on a peer-to-peer network, rather than from a central authority. Now you might be thinking, what's the big deal about decentralization? In essence, it's about control and security. Instead of a single entity having full control over the entire system, in a decentralized network, control is distributed among many participants. This makes the system more resilient to attacks and censorship. But the real game changer for Ethereum is its use of smart contracts. These are self-executing contracts with the terms of the agreement directly written into code. This means that transactions and agreements can be carried out automatically without the need for a middleman. It's like having a robot lawyer that executes contracts for you. And the fuel that powers all these transactions and applications on the Ethereum network, that's Ether, Ethereum's native cryptocurrency. It's used to pay for transaction fees and computational services on the network. Just like gasoline for your car, Ether is the fuel that keeps the Ethereum network running. Now, Ethereum is not without its challenges. Scalability, for instance, is a significant issue, but its potential is enormous. With its ability to facilitate and automate digital transactions and contracts, Ethereum is revolutionizing how we interact with the digital world. This is why Ethereum is not just another cryptocurrency, it's a platform for innovation, a new kind of internet, if you will. It's this potential that has caught the eye of major players in the financial world. Institutions like BlackRock are beginning to see the value in Ethereum's unique capabilities. Ethereum's unique capabilities make it a key player in the crypto market, attracting the attention of major financial institutions like BlackRock. As cryptocurrencies gain momentum, so does the concept of ETFs, or exchange-traded funds. So, what exactly are ETFs? Picture them as a kind of hybrid. They have the diversification benefits of mutual funds and the trading flexibility of individual stocks. They consist of a collection of securities like stocks that often track an underlying index. But here's where it gets interesting. ETFs aren't limited to traditional securities. Enter the world of crypto ETFs. These innovative financial instruments allow investors to gain exposure to cryptocurrencies without directly owning them. Think of it as a gateway to the crypto market, without the hassle of managing digital wallets or dealing with complex security measures. Crypto ETFs, like any other ETFs, can be bought or sold during trading hours on a stock exchange. They offer a way to participate in the crypto market's potential upside while mitigating some of the risks associated with direct crypto ownership. With the rise of Ethereum, the idea of an Ethereum ETF has become a hot topic in the financial world. BlackRock, the world's largest asset manager, shows a keen interest in the potential of Ethereum ETFs. Diving deeper into the financial realm, we find BlackRock, a global powerhouse in asset management, eyeing the Ethereum ETF with a keen interest. At the helm of BlackRock is Larry Fink, a CEO known for his forward-thinking approach and his ability to spot potential in the market's shifting tides. Larry Fink's support for an Ethereum ETF is not just a passing interest. It's a well-considered stance rooted in his understanding and appreciation of the value of tokenization. For those unfamiliar with the term, tokenization is a process where assets are converted into a token that can be moved, recorded, or stored on a blockchain system. This process, according to Fink, has the potential to address significant issues like money laundering, enhancing the security and transparency of financial transactions. But Fink's fascination with the world of cryptocurrency extends beyond tokenization. He sees cryptocurrency not as a currency, but as an asset class. It's an interesting perspective that reframes how we think about cryptocurrencies. Instead of viewing them as mere digital coins used for transactions, Fink likens them to gold, a valuable asset that can be held, traded, and invested in. This viewpoint opens up a whole new world of possibilities, one of which is the potential listing of an Ethereum ETF by BlackRock. This move would make Ethereum more accessible to a broader range of investors, allowing them to get a piece of the Ethereum action without having to navigate the complexities of buying and storing the cryptocurrency directly. As cryptocurrencies continue to evolve and gain wider acceptance, it's clear that Ethereum and Ethereum ETFs are poised to play a significant role in the future of finance. As we've seen with the likes of BlackRock and Larry Fink, the financial giants are watching, and they're ready to embrace the future. And that future, it seems, has Ethereum written all over it. As cryptocurrencies continue to gain acceptance, it's clear that Ethereum and Ethereum ETFs are poised to play a significant role in the future of finance. The rise of cryptocurrencies, the unique capabilities of Ethereum, the simplicity of ETFs, and the interest of financial giants all point to one direction. In a world where technology and finance are increasingly intertwined, cryptocurrencies have emerged as a powerful player. Ethereum, with its unique capabilities, has proven to be more than just another cryptocurrency. It's a platform for innovation, opening up a world of possibilities in decentralized finance and beyond. Then we have ETFs, a simple and accessible way for anyone to get involved in the financial markets. And when we see financial giants like BlackRock taking an interest in Ethereum ETFs, it's hard to ignore the potential these digital assets hold. With BlackRock's CEO Larry Fink seeing value in tokenization and comparing cryptocurrencies to an asset class like gold, we're reminded of the significant impact these technologies can have. The future of finance is evolving, and it's clear that cryptocurrencies, Ethereum, and ETFs are set to be at the forefront of this evolution.
DC, that's a fine.
Meaning, let's just put a fine point on that. The industry, meaning companies like yours, asked the SEC to allow folks who might have owned shares via a Grayscale to be able to transfer those in kind to a BlackRock or to Fidelity or whomever.
And so that there would be no tax ramifications. That was not denied. They wanted to really just create from scratch cash only, which we all respect the SEC's reasoning.
That creates an opportunity actually for Grayscale to keep those customers for a much longer time.
It does, but I think over the long run, when you start adding up the fees and adding up the fees, people are going to start thinking about redeeming and then ultimately going into an ETF.
Longer term, do you now expect other cryptocurrency ETFs? Meaning, do you think that Gary, and we'll talk to him later, Gary
like Ethereum
will have to approve an Ethereum ETF? And is that a function of something the SEC has to do, or do you think that all these things have to go to court first?
I couldn't respond to that. I see value in having an Ethereum ETF. As I said, these are just stepping stones towards tokenization. And I really do believe this is where we're going to be going. We have the technology to tokenize today. If you want to talk about, think about this. If you had a tokenized security and you have a tokenized identity, you, Andrew, the moment you buy or sell an instrument, it is known. It's on a general ledger that is all created together. You want to talk about issues around money laundering and all that. This eliminates all corruption by having a tokenized system.